Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, March 15th, and a little bit of economic news today, including also the Fed statement will be released after their every 6 weeks they do their meetings and stuff. So let's take a look here at the economic news. We'll start with the import price index, which popped up a little bit there at 1.4%. Empire State Index, which is the manufacturer on the East Coast, came in better as well. So that's good news. Home Builders Index also popped up. So far, fairly good news there. Fed statement will be coming out a little later this morning here, West Coast time, by 11 o'clock our time, 2 o'clock East Coast time. The big thing right now is it's more on the technicals. The stock market is down, and right now it looks like there's a global sell-off that's kind of, a lot what most people are the experts out there are figuring. It's basically overreaction to where things are at. People get into panic mode sometimes when we have these natural disasters because the unknown is out there, that that things potentially could become a double dip recession again. You know what's going to happen is that it probably won't stimulate their economy with all the stuff that's going on there, because a lot of assets and wealth was wiped out, so basically it's just going to return back to where it was, hence probably even obviously spending a lot more money in the process. So it could probably perhaps set them back a bit, as well as that means Japan's the third largest economy. It could slow them down, as well as slow the rest of the world's economy down too. It's a big factor. So those are the big things going on over there. Obviously, we would love to have those lives back and forget about the money, but on a financially speaking side of things, these are things that they're overreacting, but this could have an impact in the markets to come here for a while. Also, in the Middle East, even in Bahrain, where they had Saudi soldiers came in, and one report had one of the protesters even shooting a Saudi soldier, killing him dead. So it's intensifying over in the Middle East even more. So let's take a look here at the bond market. Um, with the big changes in the stock market, of course, everybody's putting them in the bond market. So we have this huge gap up here, about 45 basis points. So this is pretty big here, as you can see. We were up quite a bit yesterday, and it came back, but we ended up starting way up here. And then right now we're currently down. I expect this to close up. I can't imagine this staying open. Typically, if we have a gap opening or a gap down, it doesn't stay there for long, and we actually will want it to close because it creates more of a healthy continuation of going upwards over the long term. It creates that foundation. If we have it, it'll just kind of crumble and come back down. So we want this to remain healthy and to close up. It may not close. It may not come down. It may touch down here and then come back a little bit, but it'll still. But we want that gap closed. All right, folks. You guys have a wonderful day. Oh, I forgot to also mention. What does that mean? The bond market. It basically means that interest rates are much better today, especially the opening gap. Now, I think you may see delay regards from the lenders wanting to give out pricing, but in general, interest rates are better today. Okay, folks. Have a great day.